in some sense, SmartStream is no longer just a platform provider or a service provider in that sense. You actually have to create the market into which you are selling into today. How would you say SmartStream contributes to the standards debate? And I'm sure that standards is a very important component of moving into a utility model.
Well, standards are critically important on two aspects. I mean, one for the data and the other one for the process. So basically our offering offers as a service both a common data model for managing reference data and the corporate actions, as well as common process model. And we have proven to the clients that if on both sides of transactions you have the same data models, the same data and the same process models, your cost of processing the trade will drop at least 40 to 60%. And that will translate into a network effect where the entire industry will benefit from using a common standard.
I've noticed that you've used this phrase network effect several times in your communications and you personally. What do you mean by a network effect, and to what extent does a SmartStream contribute to the creation of a network effect?
Well, for example, as we have closed our partnership with Swift, we are convincing the banks that using the TLM engine on both sides of transactions, if you do that at the industry level, that the cost per trade will drop dramatically across the entire cycle.
Right, but you will not be the only vendor who would be providing that as a solution to Swift. So, what is SmartStream's unique proposition in that area?
Well, certainly, I mean, obviously not the only vendor. We are the vendor that achieves the highest level of straight-through processing. And we typically can bring clients from mid-70s or mid-80s in terms of percentage, in terms of throughput, to high 90s. I mean, we have clients who are close to 98 or 99% throughput.
Right.
And that translates immediately into a network effect, because the difference for banks is sometimes hundreds or sometimes thousands of staff that can be reallocated to.
Where do these benchmarks come from? I mean, the kind of efficiencies that you are able to create over and above your clients.
Well, we do client surveys every year. We also have third-party research firms that are interviewing the clients continuously, and I mean, these are proven numbers in the marketplace.
What are the most important industry initiatives that you're selling into today? I think in Europe, a number of the initiatives are clearly identifiable.
Well, for us, I mean, because half the trade rates come from unmatched reference data, we think that the most important one is the creation of a global standard that will map the instrument data, the corporate actions, the issuer data, and the counterparty data in a single data model. Once we achieve that, vendors like ourselves can map to that standard and create an unprecedented level of efficiency.
I noticed that you keep mentioning this idea of a network effect, in order for the utilities model to work. How is SmartStream contributing to the creation of a network effect?
Well, a network effect is when it's an unavoidable benefit. Mm-hmm. So if we can convince enough banks and money managers that using SmartStream on both sides of the transaction will yield a much higher throughput rate, then you get first you get a snowball effect, that it becomes your cost per trade so much lower than your competition. I mean, if your cost per trade drops by 40, 50, 60%, versus your competitor, your clients, I mean, and your client service is going to increase by that much, and your profitability as well. So that becomes a very big differentiator. So that's. We have done the deal with Swift. We have implemented our TLM on demand product directly on Swift network. We're working with a lot of service bureaus around the world around the same concept. And we have many clients. We have more than 1,000 clients. And we're hoping to convince them that, again, having SmartStream on both sides of transactions will dramatically lower their back office costs.
Outside of Europe, how would you describe the kind of clients that you're speaking to?
I mean, we have a lot of clearing houses and CSD that are our clients. We are having a very good conversation with interdealer brokers. So we're trying to basically broaden the usage of the technology, but also the reference data.
Well, is the profile of that kind of client base different from North America and Europe and the emerging markets in a sense?
It's quite different. I mean, in the emerging markets, we work a lot with resellers and partners, and we have announced a number of partnerships with Swift service bureaus, where they control the last mile of Swift and offer the TLM on demand service.
If cost is the most important consideration that banks, the financial institutions are thinking about today, where do you personally think the value proposition part of the business is going to evolve in the next 2 to 3 years?
Well, I think client service is certainly the most important one. The ability to offer risk management tools across all asset classes, across all geographies in real time is very, very important. And that's going to be driven both from the client side and also by the regulators.
Give us a sense of how the need for data has evolved in the last year and the kind of need that you're servicing into today.
Well, if you look at any application like risk management, anti-money laundering, trade lifecycle management, post-trade processing, back office, data is where things break. Right? Data causes half the problems. If you don't have a single view of your data across a large bank or hedge funds, how can you get a view of your risk? And that's, I think the crisis exposed the weakness in the system of the lack of data standards under incredible fragmentation in terms of data, databases representing financial instruments, databases representing corporate actions, issuer databases, as well as counterparty.